Welcome to Atlanta's Commercial Real Estate Show, brought to you by Bull Realty, the show for property owners and business leaders. Host Michael Bull brings you market analysis, advice, and opportunities around Atlanta.
Welcome to the show, and thank you for joining us. Well, today my guest is Ryan Severino, a senior economist with JLL. He's joined us in Studio One. Thanks for being with us, Ryan.
Thanks, Michael. Always a pleasure to be here.
Well, Ryan, one of the things that we hear a lot in Atlanta, and every time I'm in a group, and they say, "Oh, it's Michael Bull, Commercial Real Estate Show. He's the host of Atlanta's show and everything." They ask me about multifamily, because you see so many buildings that have been built, and the cranes and the amount of multifamily being built in Atlanta right now. What do you think about the apartment market in Atlanta?
I'm still pretty bullish on the apartment market in Atlanta. I think if you look at the pipeline, certainly it's robust. I don't want to downplay it at all. But I think if you look at the pipeline relative to cycles historically, I don't see it as being as big of a challenge as we've seen in the past. And so I think my general thesis nationally sort of applies to Atlanta. Don't throw the baby out with the bathwater here, but do your homework. Really understand, what's going on in your neighborhood, what's going on in your submarket, what's under construction, what potentially could come under construction. Because I think in a market like this, you're always going to find pockets here and there that you might have to be a little more circumspect about. But overall, I still feel pretty good about the market. I think if you look at the demand side, the demographics are still very favorable here. I think if you look at what's been going on with population growth, household formation, in some respects, the city and the metro area has really bounced back relative to what you saw before the recession. So I think the demand side is still really robust here. Just be a little cautious about supply. It doesn't scare me away from the market completely, but I'd certainly do my homework before I thought about jumping in.
Yeah, well, good point. And when I started this business many years ago in Atlanta, I was in the apartment industry, and one of the things that I was asked all the time was from people who were moving to Atlanta was when they come to the in-town market in Midtown, there was like, well, there's no apartments here. Where? But now that's changed, right?
It's so interesting to see that. So I first started coming to Atlanta probably in the late 1990s, and that is exactly the way that it was explained to me. That those were just parts of town nobody lived in. You just didn't go there. And you think about the way the city's changed over that 20 or so year period. You go to Midtown now, and it's I feel like the sort of, whatever you want to call it, the urban renaissance that we saw in some other markets, maybe a little sort of earlier in sort of this urban evolution, for lack of a better expression, you're now seeing in places like Atlanta. And I think people are sort of embracing the idea that, being in a dense infill location, especially among, sort of younger residents, that there's a lot of upside to that. And so I think Atlanta always had those really, it was a really good big city with a lot of interesting things to do. I think people now are sort of just embracing the sort of co-location a little hardier here than was done in the past. It's sort of work, play, live kind of dynamic that you started to see in places like New York and Boston and DC and Chicago starting maybe 20 or so years ago. I think the same thesis is playing out here.
Ryan, is there a chance that affordability could become an issue with these new apartments in Atlanta? Because when you do the math to see what these tenants are paying in rent, you really got to make six figures to afford it.
It can, and that's where I'm a little concerned, just because if you think about what it costs to build apartments these days, especially in a lot of the infill locations where a lot of people would ideally like to be building, assuming that they can secure the parcel of land. The rents that you need to justify that construction, it's pretty pricey these days. And in a market like Atlanta, there is certainly a limited number of people who are probably going to be able to afford that kind of rent. So I worry about that part of the market. I think some of those properties are probably going to have a little bit of difficulty hitting their underwritten rents, but overall, I think as long as you stay away from the real lofty heights, I still feel pretty good about the market overall. I don't think outside that sphere that I'm too overly concerned with it.
So in the past, when you looked at cities for markets to invest in multifamily around the country. You told me earlier that Atlanta was kind of at the top of the list. Where might Atlanta be today?
It's still near the top of the list. I mean, and again, it comes back to the story of supply. And I think, looking around and seeing physical cranes and projects under construction can be scary, but I think if you look at it like I do through sort of a historical lens and you see what's under construction and certainly what's under construction relative to inventory, I don't see it being as big of a challenge as we've seen in cycles past. I've been bullish on Atlanta apartments for the last 3, 4, 5 years. I still think going forward at least the next couple of years, it's certainly toward the top of the markets that show up on sort of my ranking list when I look at it. I still think there's opportunity for revenue growth there. And again, if you're going to play in the top of the market space, just be cautious about it. Pick your spots, watch what else is under construction, and think about your entry price point, because there is a sort of a finite pool of demand that can really afford those kind of top of the market projects.
Yeah, well, good points. And another market that I think Atlanta's been different on lately is the office market. We've seen rent hikes for Atlanta office rents that we've never seen before. Right. I want to get your opinion on that, because you see the entire country, and I want to get your perception on Atlanta office market, what you see moving forward. So stay with us. We'll be right back, and we'll talk about the office market. I'm Michael Bull. This is Atlanta's Commercial Real Estate Show. Stay with us.
Raise the value of your commercial real estate project by telling your story to a national TV audience. CRE Groundbreakers, a new branded content series coming to TV this fall. Details at barnescreativestudios.com.
Welcome back, and thank you for being with us. Our guest is Ryan Severino, Senior Economist with JLL. Join us in Studio One. Ryan, thanks for being with us again.
Oh, thanks for having me, Michael. I always like it.
And Ryan, one thing that's really been dramatic in Atlanta's commercial real estate world is the office market. Atlanta hasn't really seen strong rental rate growth in the office market, I think, since I was born. So that's a long time. And but lately, over the last 2 or 3 years, we've seen some really strong rental increases. Why do you think that? I guess if you're an office building owner, you're enjoying it, or if you're a tenant, maybe you're not enjoying it. Why do you think this is happening to us?
Not to sound like an economist, but I think it's, to an extent, it's a supply-demand story. I think the demand side here, I think even better than I do, is still strong. You're still seeing company relocations. You're still seeing very significant job growth. It's one of the the biggest job creators in the country. If you look at the supply side, there aren't a lot of attractive spaces out there that can still be let at this point, especially real sort of big contiguous blocks of space. If anything, I think you might even be, I'm almost hesitant to say this because of the shock value of it, but you could almost argue that early enough in this recovery, the most recent sort of economic recovery, maybe there wasn't enough office construction.
I agree.
Right? There were, a handful of projects maybe of significant scale that were under construction, if that. And I think now maybe the market is kind of playing catch up a little bit. So you're right, it's a double-edged sword. It depends on what side of the market you're on. But I think economics is a powerful force. If the landlords didn't feel like they had a commodity that they could price at a higher rent level, they wouldn't be doing it. I don't think markets are always efficient, but I think they tend to swing toward efficiency when it behooves them. And I think that's the case right now. There's just not that many good spaces out there.
Well, what would you expect moving forward for the Atlanta office market? Because if you're investing in it, obviously you want it to grow, and if you're a tenant, you'd like to have some decent rates and also be able to plan for down the road. It doesn't seem like we have that much spec or new construction on the horizon, so what do you expect for the future?
I'm still bullish. Yeah. I think if you look at the underlying economic dynamic of the market, it's still strong. You see gross metro product growth here that is significantly faster than the nation overall. You're seeing job growth here that's faster than the nation overall. You're seeing relocations of companies away from more expensive, sort of, I'll call it more onerous parts of the country, even parts of the country with, let's see, more inclement winter weather, things like that. It continues to be, a really significant economic engine. It's a city of scale. and it started to build on that through economies of scale. And it's not just sort of the traditional industries you think of. I mean, even some industries that you might have traditionally thought of Atlanta being more of kind of an outpost, like financial services or even technology. Now you're starting to see that become more of an entrenched presence here. And once that economies of scale ball starts to roll, it starts to snowball past a certain point. And I think you've really seen that. So I'm still pretty bullish on the metro economy here and the office market overall. I think there's a lot of good underpinning what's going on in the economy here.
So then, generally speaking, then, if you were a tenant, would you opt for a longer initial term lease now to kind of protect yourself from some of the future rent increases? We don't see a lot of office cranes out there.
No, the only thing that, as a general rule, I'd say consider that. The other thing I'd say if I'm advising tenants is think about maybe when the next recession is coming. Economics is a cyclical phenomenon. I'm optimistic, cautiously optimistic in general, but I'm not a fool. I know that this cycle is going to end at some point. If someone has a lease terminating, toward the end of this decade, the beginning of the next decade, depending upon when the economic cycle decides to turn, and I don't think it will be as daunting here as it will across the country, but that's maybe a way to play that. If you think you can, and it's going to be a tricky thing to do because recessions are always somewhat unpredictable, but if they could potentially time that with a downturn, they might actually be able to then lock in a relatively long-term lease. But I think short to medium term, until we hit that next recession, rents are going to keep going up almost certainly.
So are you optimistic about investing in office market around Atlanta then?
Yeah. Generally speaking,
and where
yes.
are the opportunities you see?
I think medium to long term, yes. I think because again, a recession is going to hit everybody. So and it's not, that's a sort of systematic universal thing. But I think medium to long term, again, you look across the city and you see those. I don't see those fundamental underpinnings dissipating anytime soon, right? I think what happened was this was a bad recession that we went through. I'm clearly understating it, but it was a really bad recession. And I think what happened is people thought that recession was going to derail sort of the fundamental kind of underlying dynamics of the economy here. And that actually hasn't happened. It took its hit like everybody else did. Nobody came through the Great Recession unscathed. But if you look at where the economy is now, growth has clearly started to reaccelerate. I mean, last year was a really good year for growth. Gross metro product grew about 4.5%, which was more than double the average. So medium to long term, I think pick your spots. But yeah, I'm still bullish on office here.
All right, we're going to take a short break, and I'm asking Ryan about the retail market, which has been crazy around Atlanta. So stay with us. I'm Michael Bull. This is Atlanta's Commercial Real Estate Show. The Commercial Real Estate Show is brought to you in part by your friends at Bull Realty. When your business requires proven performance, visit bullrealty.com or call 800-408-BULL. Thanks for being with us on Atlanta's show. My guest is Ryan Severino, a senior economist with JLL, here with us in Studio One. And Ryan, what you get a national perspective. You always have when you're at Reese and now at your current position. So what is the kind of the national look of Atlanta when it comes to retail? Do they think we're over retailed down here? Or?
I think everyone thinks we're over retailed everywhere. I think in retail these days the perception is sort of, and forgive the expression, but it's really sort of like the have and have nots. Mm-hmm. I feel like in retail, people really sort of fixate on, at least from sort of a metro point of view like we're talking about, people will fixate on sort of, the key coastal markets. And they'll say, if you want to find high rents and low vacancy, you look at the coastal markets, right? Look at the New York metro area, California, maybe, DC, Boston, places like that. Because not surprisingly, those tend to be places where you have a significant number of higher income affluent households, which go figure, those are the ones who tend to do a lot of the shopping. I think by default, Atlanta sort of falls into the other category, but to an extent, I think that's kind of a mistake. I mean, I think, again, you're closer to the market than I am, but if you think about it, it's a big, diverse, dynamic market. Is there too much retail? Maybe. There's too much retail everywhere. But I think there are parts of the market here that are clearly thriving in a way that I think a lot of people outside of the Atlanta metro area would probably be a little surprised.
Yeah. Well, it's interesting. We just did a lease in Buckhead, and the tenant's paying $48 a foot plus CAM, but they're doing well. I mean, and then we look at some markets, and there's some empty buildings.
Right. And I think that's the thing, and this is true probably across all metro areas. There is going to be a variation depending upon what part of the market you're in, and I think a lot of that reflects what's going on at the local market level, right? If you're in a part of a city or a metro area where the underlying, sort of microeconomy is performing well in terms of, who lives there, who shops there, where do they come in from, what's their profile. There are parts that can thrive within a short driving distance away from parts that are struggling, and sometimes that distance is incredibly
across the street.
short.
Sometimes.
Yeah, but I think if you look at the character of, and I always come back to this from something that my first boss in the industry taught me. If you come back and you look at sort of the character of that local micro market, right? If you see things that are a little more discretionary in nature, right? So 20 years ago it would have been a Starbucks. Today I think it's almost any sort of coffee shop, sort of higher end restaurants, or at least kind of interesting dynamic restaurants, not just sort of chain restaurants or fast food and things like that. In addition to some of the actual more traditional type retail, those are very dynamic markets where I think you're not only seeing higher rent levels, but I think you're seeing faster rent growth. I think that's the key to me. There's got to be that sort of dynamism there that propels the market.
Yeah. And we sell retail properties and lease them, and we're selling them all over the Southeast, and there seems to be a lot of interest in investors to buy retail properties. It seems like retail's, there's some flux there. There's a lot of change going on. So I guess in some cases there might be some opportunities. I mean, in a lot of cases it's good real estate.
Right.
It's good properties.
I think the issue is with retail, we tend to paint with a very broad brush, right? Everyone, the perception of retail is, e-commerce is destroying bricks and mortar retail. And I think the reality, like most things, is far more nuanced than that. And I think there is value out there in the retail space. I think you do have to be careful because I think there are probably some centers out there that are going to struggle for a long time, if not ever. But I do think that there's probably, sort of unpolished gems out there that are just, waiting to be sort of capitalized on, because I think there are a lot of people who have bought into that perception about retail in sort of structural decline, and they don't want to touch any of it. And I think there are definitely parts of the market, whether you're talking about big Class A institutional caliber assets or smaller assets, where I think the broad brush has probably tarred them a little unfairly.
What about lenders, Ryan? How do lenders feel about retail today?
I think it's very deal specific. I think, again, you have to get past sort of the perception versus reality. But I think if you go to a lender with a good quality asset and a good story, I think that there's interest out there. I don't think there's a lot of appetite for construction development for retail right now. I don't think there's a lot of appetite for kind of, sort of middling caliber assets where, there might be a vacancy issue or a big potential vacancy issue coming sooner rather than later. But I think if you're talking about good sort of dense, non-discretionary grocery anchor type stuff, if you're talking about sort of the kinds of properties that we were talking about in a good dynamic area where you have a thriving community where people are clearly spending money, I think that there is sort of a willingness out there. I especially think that as you've started to see lenders back off the apartment market to a certain extent, because I think there's concerns about it overheating, concerns about overbuilding. The regulators are certainly taking a harder look at multifamily than they used to. I think some lenders would still like to put money out, maybe just not in some of the sectors where have kind of been the darlings of commercial real estate for the last few years. So that is one where they might actually be willing to do a pretty good deal.
All right, well, good points and good information as usual, Ryan. Thanks for being with us.
Always my pleasure. Thanks for having me.
And thanks for joining us there on the radio stations, YouTube, iTunes. We appreciate you being with us. If you'd like more information on any of these subjects, feel free to reach out to me directly. You can find my contacts at bullrealty.com. Thank you for being with us. See you next week.